Hello, very good dear subscribers, and welcome to a new video on the channel. Today we have the special monthly video reviewing my portfolio starting from €0 with you. Get ready to discover my September pick. As always, first I would like to analyze a little about the evolution of the YouTube channel and how I see it in a couple of months. As you can see, the evolution during this last month has not been so positive since we grow less than I expected in the daily number of visits, and we have experienced a slight deceleration in daily new subscribers. Wow! This month we have not reached the goal of reaching 1,750 subscribers. So for this month the goal will be the same and will be to reach 1,750 subscribers. Do you think we will make it? The evolution of the investment made last month has not been good, as it has been flat, but in overall the portfolio has performed in a positive way with near 2% growth. Hershey, Texas Instruments and Johnson & Johnson are the worst performers this month with over 2% decrease, while Nike and Comcast are the best performing ones with near 5% upside, due to a change of Nike's CEO and Fed rate cuts respectively. The good news is that during this month we have received 4 dividend payments. Specifically 95 cents of Johnson & Johnson, €1.04 from Hershey, 46 cents from Texas Roadhouse and 79 cents from NextEra Energy. That makes a total of €3.24. This month I will continue choosing a company that I have in my portfolio in order to reduce my average cost price, and due to the high drop on Nike price during the last months, I have seen the opportunity to expand Nike before it goes up. That is why this month I am going to compare 4 different companies in the footwear industry, such as Crocs and Deckers, which are companies that do not pay dividends but with exceptional growth potential, or companies that have low dividend yields such as Adidas or Nike that also are the kings of the industry. In order to better evaluate each section that we are analyzing, I have decided to create a Google Sheets table in which we will place the score obtained by each company, like the previous months. Let's start by checking the dividend safety. Both Nike and Adidas have a perfect score in dividend safety while Crocs and Deckers have no dividend safety. I consider that it would be also perfect due to its consistency in free cash flow during the last years. Regarding dividend yield, as I mentioned before, 2 of them do not pay dividends and the other 2 pay dividends but below 2% dividend yield. That is not the range I am looking for, but the growth capacity for the next 5 years is what compensates this lower initial dividend yield. Continuing with the evolution of the revenue and earnings of each company. Adidas is the only one who has had a flat evolution, while the other 3 companies had a very positive evolution during the last decade. Now, if we look at the evolution of free cash flow per share over the last 10 years, Deckers and Crocs had a very positive evolution again. However, in this case Nike has had less positive evolution, while Adidas one is more inconsistent with some drops in UPS. As I mentioned in my previous videos, I want to make investments in companies that make buybacks, and surprisingly all 4 companies are doing a clear buyback program during the last decade. The price/earnings ratio is a good indicator to check whether a company is undervalued or overvalued, in addition to a fair value analysis. Nike and Crocs are below the 5-year average price-to-earnings ratio, while Adidas and Deckers above them, indicating an overvaluation of their price. Moving on to yield on cost, I decided to do an experiment here since 2 of the 4 companies do not currently pay dividends. So I obtained the current free cash flow per share values of the 4 companies, assuming a free cash flow payout ratio of 60%, which is the maximum recommended in my opinion. This gives us the dividends that each company would pay if they used 60% of their free cash flow to pay dividends. And taking both the share price 10 years ago and the current price, we obtain the yield on cost if you had bought the share in October 2014 and the current dividend yield. In this case, both Deckers and Crocs would have an annual compound difference in the dividend yield of around 25%, while Adidas would be lower but still above double digits. Finally, Nike would be the one with the worst result with an annual compound growth of around 8%. Continuing with the total return that each stock has offered during the last 5 years. Here Deckers and Crocs are also the clear winners with almost 500% total return, while Nike's total return is also positive, and over the selected footwear S&P 500 ETF. But the other Adidas, in this case, is the one who obtained a negative total return during the last 5 years, which can indicate a great opportunity if Adidas successfully solves the problem that has caused its share price to suffer so much. Once we have all the values of the scores obtained, what I will do is multiply the average of all the sections by the score obtained in terms of dividend safety in order to more efficiently adjust the results to its security. Well, as you can see, Nike has obtained the highest score due to its attractive price to earnings and dividend yield that lead Crocs to lose some points. As a result, Nike will be our pick of September despite the fact that I will consider Crocs in the future. Then we enter the Scalable Broker and carry out the operation, looking for the Nike ticker. Remember that I will always try to make a purchase of around €100 so that the commission is less than 1%. This month, I have made a little change since I have bought Nike another 2 times, one after the huge drop in June and the other one the 8th of August before Nike price recovery, as you can see in this TradingView graphic. Well, we go on to write down the purchases made in our Google spreadsheet. So I put the date on which I made the purchase, the Nike ticker, and finally I have to look at the euro to US dollar exchange rate to have it as a reference. As you can see, it gives me a total of €74.15 for the purchase of June and €131.77. That is a total of €205.92 more for my portfolio. Since I have already placed the ticker in the first column, it has automatically added the number of new shares and the new average price per share. Surprisingly, with this new purchase the price return goes from 9.15% to around 8.5%. Additionally, this investment will allow us to reinvest 0.08 shares annually via dividends when before they were only 0.02. Impressive, right? As we are already in the month of October, I will move on to the monthly value sheet, and in the month of October 2024 we will write the €2,135.48 that our investments are worth in the market. This month the portfolio made an upside of 1.56%, which is slightly less than the 2.66% that VOO, S&P 500 ETF, has obtained in the same time period. So this month we underperformed the market. This has been all for today, dear investors. A pleasure, as always, to receive your great support. Remember that these videos are not investment recommendations and it is necessary for each of you to do your own analysis and consult a financial expert if necessary. If you liked the video, don't forget to subscribe, hit the like button and activate the bell so you don't miss any of my interesting videos. Thank you for watching the video, and tell me through the comments what you think my portfolio will look like next month.